Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Thursday the 2nd of the 9th 2021. Time is just coming up to 0440, 20 to 5 in the morning GMT. Asian session coming to a close, European session firing up, our lunchtime North American session. Right, yesterday Wednesday the 1st then, we had a positive opposed driver in the euro plus 76. Front and backdoor flows mainly coming out of the yen at minus 48, out of the dollar at minus 42, and the pound was the positive rock at plus 14, activity plus or minus 90. Excuse me. Right, intra-week then. Basically, this is from Monday the 30th of the 8th to about 15 minutes ago. We've got a positive opposed driver in the euro at plus 131. Front and backdoor flows mainly coming out the yen at minus 98, out the dollar at minus 48, and the pound was the positive rock at plus 15, activity plus or minus 146. So the batting order is the same, the drivers are the same for yesterday and the week in general. Intra-week then, this is from today, Asian session to about 15 minutes ago. We've got a positive, we've got joint situation here because we've got symmetry in the numbers. So we've either got a positive opposed driver in the pound driving, or we've got a positive, a negative opposed driver in the dollar driving at minus 12, with the euro and the yen being the rock and the mover interchangeably on the positive and the negative side. So, and that's on activity of plus or minus 18. So low activity. So basically yesterday, as during the week, we've had euro strength driving the market, yen weakness, dollar weakness, and a bit of pound strength. And this has been the theme for the week. So we'll stop it there and write up the flow. Right, we're back. We've written up the flows then. So the euro is strong except against the dollar, the yen, and the pound. So it's strong except against the majors. The yen is strong except against the pound. The pound is strong across the board. The Swiss is weak except against the CAD, the AUD, and the NZD. So the commodity currencies are weaker than the Swiss. The CAD is weak except against the New Zealand dollar. The AUD is weak except against the CAD and the NZD. The NZD is weak across the board, and the dollar is strong except against the yen and the pound. So what have we got? We've got pound strength in the Asian session, and we've got New Zealand weakness, and we've got there's first signs of euro weakness to a certain extent, but it's strong against the majors. So what's going to knock it about, or has knocked it about? We've had the AUD trade balance, which came in positive. We've got Swiss GDP today. Now you should view that in terms of the eurozone really, because the Swiss economy is very dependent on the eurozone. So view that as an indicator of what's happening there. We've got Tier 2 US initial jobless and labour costs. So it's relatively light day to day today. And you've got this relatively early Swiss GDP as probably the main focus. And the rest of it is going to be sort of driving themes and positioning ahead of tomorrow's NFP. Right, so and tomorrow, as I said, we've got Euro retail sales, NFP non-farm payrolls, and US service PMI. So there's going to be an element of once the Swiss GDP is out of the way, the coast is going to be clear to squaring up or making positional trades for the tomorrow's NFP and service PMI in the US. Right, so we'll stop it there and write up the asset classes. Right, back again. I've written up the asset classes then. So the US dollar index basically was pumping higher. It broke a double top. It came right back. It's now 0.32 from the high, so it's come off about a third from the modelled high. So the dollar's relatively soft, and we've been looking for this floor in the dollar for a few days now. Gold should potentially like a soft dollar, and it's basically recovered to a certain degree. It's above half marks now. It's 0.45 from the high, but it's still not fully engaged in on the up. Oil had a big pump up. It went back to base camp. It's now 0.43 from the floor, so oil's still pretty soft, less than half marks. Wall Street, series of new highs. It's come off its sub high now. S&P, likewise, series of new highs, but it's near the top. And the tech is similar, but it's holding at the top or pretty near the top. So that's the sort of batting order, if you like. Tech, S&P, Wall Street in terms of where they are in the modelled highs. US 10-year then, this is the price of the bond. Price kept charging down for a while, yields went up, then the price has been going up, and it's coming back now. It's 0.23 from the high, 23% the price has come off, so yields have strengthened up a bit in those terms. And the bund, which is the European equivalent, basically we've had a big pump up in price, softer yields, then it's come back down. It's now 0.40 from the high. So if anything, European yields are now stripping US yields in terms of modelled highs and lows, and we've seen this strength in the euro backing that up to a certain degree. Copper then, big chop, big break, then it fell to the floor pretty much and below. It's now half marks, 0.5. Copper's really basically rudderless and messing about at the moment. And US steel broke a significant top after dropping, and it's now 0.33 from the high. So it's come off about a third. So it's pretty range bound, US steel, and it's about a third down on the modelled high. Right. So let's get rid of this and then try and make some sense of what's been going on. We've been sort of suggesting that the flows have been indicating some sort of peak in the euro, floor in the dollar, and they have been indicating that. But the actual market, as the data has been coming out, it's been reinforcing the status quo, if you like. So we've got this dollar, euro, yen, pound. So the dollar's been sort of coming off, and the euro's been going up, and the yen. If you remember the flows, where are we? This week we've got euro strength driving and yen weakness. But the yen is sort of fairly neutral because it's you've got this yen weakness, but you had yen strength in previous weeks, and it's sort of at a neutral position, believe it or not. So there we are there. And likewise with the pound is the pound has been sort of oscillating and the main action has been in the euro and the dollar, and in terms of the Asian session, the pound is showing a little bit of strength, as is the yen, but these flows are very small, relatively speaking. So you need to be careful when you're trading them. So the key thing this morning is going to be this GDP for the Swiss, because that's going to set that's an indicative of the EUR basically, and that will feed into this idea of this top and this floor in the dollar. And if you get a very poor reading in the Swiss GDP, that will reflect probably quite poorly on the euro, so you might see some downward pressure on the euro. So we're going to be looking out. Maybe there'll be a trigger here with the Swiss GDP. People throwing in the towel and positioning for tomorrow's NFP. The flows are quite messy, but that's where we are. So we know the basic structure. We know the Asian flows. We know the asset classes, and we know basically what's going ahead on the day, and we can make some reasoned decisions. But this will be the trigger really, Swiss GDP in our view, and that may well create a catalyst for a peak in the euro and the dollar coming off its floors as they position for NFP. We had weak ADP yesterday, but that's not always a good indicator. So messy again. So take care in the markets, and thank you for watching. See you tomorrow for the daily briefing. Thank you.